Headlines are buzzing. Apple hits records, AI chips are on fire, and oil is drifting. What's our game plan? Today, we'll simplify Apple, AI, rates, and oil into a straightforward portfolio playbook for U and EU markets. Just one framework, 3 key metrics, and a handy checklist to guide us. Remember, this is for education only, not investment advice. No stock tips here, just a repeatable process. Apple's rally is fueled by strong iPhone 17 sales, and the market's eyeing a $4 trillion valuation. But what do we do with that? AI semiconductors are the heartbeat of the market. TSMC raised guidance due to strong AI demand, and NVDA's last quarter showed data center strength. The narratives are loud, but we'll rely on metrics to avoid chasing trends. The ECB is likely on hold, while U.S. traders anticipate another Fed cut. This policy path impacts duration versus equity risk and sector leadership. Oil prices are slipping toward the mid-60s. With mixed signals from OPEC and hints of contango, this matters for inflation and energy versus defensives. Let's talk about the framework. Keep sleeves you can live with through cycles. Core, broad US and EU exposure as your engine. Cashflow, a dividend sleeve for resilience while narratives shift. Guardrails, maintain 5 to 10% in cash or T-bills to ensure pivots are funded, not emotional. Now, the 3 metrics to sanity check before you join the party. Is it Apple or AI leaders? First, run the gate. ROIC, are durable advantages actually paying off? FCF and payout, does cash flow comfortably fund dividends and buybacks? EV-EBIT, is valuation anchored versus the sector, not just the story? If 2 out of 3 metrics fail, it's not a buy the headline candidate. If 2 out of 3 pass, it's eligible for measured ads. If the ECB holds and the Fed eases, we get a duration tailwind for quality growth. But don't drop cash flow. Dividends cushion drawdowns. If AI demand persists, keep core exposure, but screen leaders with EV-EBIT and FCF to avoid late cycle excess. If oil remains benign, headline inflation pressure eases. Defensives and high-quality cyclicals can quietly work, funded by trimming stretched overweights. Before making any changes, ask yourself, which headline is truly investable? Is it Apple sales, AI foundry guidance, central bank news, or the oil curve? Does the target pass ROIC, FCF, and EV-EBIT? At least 2 out of 3? Are your sleeves drifting plus to 5% from targets? Rebalance with new contributions first. Stage entries in thirds with limit bands, journal your decisions, and set the next review. Let's do a quick demo of Alpha Atlas. Investor AI turns headlines into actionable steps. Paste your holdings or upload a sample CSV, and you'll see risk grades from A to E to avoid adding risk blindly. Forecast bands for 1, 4, and 12 weeks. No single number calls here. Explain cards for ROIC, FCF coverage, and EV-EBIT so you know the why behind your decisions. What-if scenarios? ECB on hold, Fed cut, oil at $60 or $70. It maps sector impact and runs a portfolio-level Monte Carlo drawdown band. In short, it's a rotation that's planned, funded, and testable, even during headline-heavy weeks. If you want less drama and more process, subscribe to Alpha Atlas. Check the links below for the checklist and sample CSV.